Hey guys, it's Tim Melvin coming back to you on Friday afternoon. Last week we were asking the question, will he or won't he, as Vladimir Putin continued to stack troops on the Ukrainian border? And well, we know the answer to that now. Yesterday, he could and he did. He has invaded the Ukraine. He is on the verge, it looks like, of taking the capital city of Kiev. Don't know how far this is going to go. Nobody really does. Um, it's a weird situation. It's the most unrest and outright violence and war that we've seen in Europe since the end of World War II. So a lot of folks all over the planet are a little bit on edge. That does not apply to stock market investors and traders here in the United States. We had a big sell off yesterday when it was announced that he had crossed the border and was actively bombing locations throughout Ukraine. We had a sell off of almost 900 points at one point. And then somebody pointed out that, in fact, if World War III were to break out, the Fed would probably slow the pace of shrinking its balance sheet and raising interest rates. And that's fantastic news for stocks, especially story stocks with price to sale multiples as high as possible. We saw a massive rally in the NASDAQ. It's continued through today as the Dow is having its single best day so far in 2022, as money is just flooding back in to U.S. stocks after yesterday's little mini sell-off. Right now, we've got the S&P 500 is back out of correction territory, down less than 10%. The tech-heavy NASDAQ is only down 15%. The Russell 2000, of course, is the redheaded stepchild of the group, and that is off a little over 17%. Community Bank Trust that we follow, the ETF QABA, it's off about 2% for the year. Our banking on profits portfolio, we're up about 2.5% a year, and all but two of our positions are solidly in the black. No one knows how this stuff plays out in Europe, guys. Putin has been unpredictable, unreasonable. He has clearly threatened to use nuclear weapons on any Western nation that dares to retaliate militarily against his forces. I think that he was ready for the sanctions, guys. He doesn't care. Yeah, we're going to freeze some of his assets in the West. Big deal. I guarantee you most of the man's wealth is safely within the borders of Russia or other very friendly countries, and most of it is probably in the form of hard assets. You're really not going to get to Putin or his cronies in the Kremlin with sanctions. This is going to be a lot like fighting Godzilla with a fly swatter. It might have seemed like a good idea at the time. It's not gonna have do much good. The West is in fact really powerless to stop him at this point, unless they want to trigger World War III, because I do believe he would respond and it would be game on for at least a massive conventional war, with the threat of a nuclear war or other advanced weaponry kind of holding over the fray. So he's got a free hand for right now. The markets are rallying at the moment. Lots more chance for big bad news to come flying out of Russia in the days and weeks ahead. We'll see exactly what does indeed happen. Now, it's as bad as all this is, and it's bad. I have to admit, I would not want to be in Europe right now. But if you look at the backdrop here in the United States, this is a fantastic time to be an owner of small community bank stocks, especially if you use the wildly successful rules that I've developed over the years to invest in these things. We're up on the year so far. We had a fantastic year last year. Look, guys, I don't know if you saw the spending numbers this morning. Consumers are spending again. Businesses are ordering equipment again. All of those orders were up. Sales were up. So they're spending money. They're borrowing money. That's going to create loan demand. You've got credit conditions are still just absolutely spectacular. Best I've seen them. Capital levels are extremely high. So we come through earnings season. All of our little banks, they're paying dividends. They're raising dividends. They're buying back stock. The shareholder yields are just absolutely terrific. We've got some activists taking positions in the stock. We've seen some insider buying in our stock. It's just like it's all the lights are green, guys. It's go time for the ownership of community banks. And I think you're going to do a lot better in community banks over the next several years than you will the index or the aforementioned story stocks with high price to sales multiples. I think, yeah, the rally the last couple days, real cool. I think their day is over, and the onslaught has just begun in many of those stocks. So the other thing that banks, of course, have going for them is higher interest rates mean higher net interest margins, which means higher profits, which should mean higher stock prices. And against all of this wonderful all lights green condition, we've still got the ongoing consolidation wave. And the Biden administration is trying to reel it in, but they haven't been real successful with too much that they've tried to do so far. And I don't think they're going to get some new regulators in positions, and they're going to increase the regulatory load, to be sure. That's going to have the effect of increasing, not decreasing, consolidation, because a lot of the banks, we saw this back in 2014, 2015, as the waves and waves and waves of regulations that were passed in the aftermath of the great financial crisis really put a brake on profits for smaller banks. And they had to go for scale. They had to sell the bank or merge with other banks to gain the size and scale to deal with regulatory prices and pressure. We're going to see some of that again the further along we get into Mr. Biden's administration. It doesn't matter what your politics are. The Democrats right now are the anti-bank, anti-corporations party, and they're going to undo what President Trump did during his term. It's just how the game is played today, unfortunately, and it's not going to slow consolidation. I think it accelerates it. The other issue that you have is we accelerated digital banking by more than a decade during the pandemic. Even people who swore they would never bank on their phone, guess what? They're banking on their computer, they're banking on their phone, they're getting used to it, and now they're starting to insist that their bank have digital offerings that keep up with the big banks. Really hard to do when you're a small two-branch bank with 500 million in assets. Just a tough game. It's tough to play Jamie Dimon's game at that level. So we're going to see a lot of consolidation. And of course, look, it looks a little scary right now. We've got inflation, and can the Fed get it under control? And they're probably going to screw that up 6 ways to Sunday. I'm highly confident. So, we're going to see slower economic growth in 2023. I don't see any way around it. The Fed's projections are saying it goes back to a sub 2% year. If they get too aggressive or too stupid about trying to get the inflation dragon back in the cage, maybe we even have a little bit of a recession at some point in mid to late 2023. The only way to grow is going to be to buy. So you're going to see bankers buying right now, trying to achieve those cost savings, 30, 35% that you can get in the average bank merger to get their earnings up going into late 2022 and into 2023. So still lots of drivers there for bank consolidation. If you don't own bank stocks right now, you are making a fatal investing mistake. I think that, by the way, that's true like 90% of the time. All the testing and studying that we've done shown that using my rules, owning bank stocks is more profitable than just about anything else that you as an individual investor can do with your money. Most of you don't own enough of them. Now, one thing that we are seeing right now, we're seeing energy prices. They've cooled off a little bit today. We got over $100 for Brent yesterday. Oil prices are going to stay elevated, and I'm not saying they can't pull back, but they're not going back to 30 anytime soon. We're just going to deal with this. The war in the Ukraine, Russia gains control of those assets. Well, that's probably going to put some more pressure on energy prices around the world. We'll see how all that plays out. But I am a huge fan, and have been for some time, of energy infrastructure. That's the pipelines here in the United States. It's the gathering stations. It's the storage tanks and facilities around the country. We're not getting away from traditional energy anytime soon. I know the politicians and the activists want you to believe that that's going to happen. It's not going to happen. I look at the research report that Bank of America did coming out of the COPE conference in Glasgow that discussed climate change. And guys, you can't do this without a global depression. You can't get to net carbon zero by 2050 without triggering a deep recession, if not a depression, in most of the world. It also involves a massive transfer of wealth from the developed companies to the emerging companies, with China and India being two of the biggest beneficiaries of this cash transfer, where we pay for them to develop renewable energies while they go right along burning coal. China and India changed the language on the last day of the report to begin phasing out coal to begin phasing down coal in 2040, I believe, was the start date for that. Until then, they're going to burn coal. In fact, even as that conference was going on, and China was committing, by golly, by gosh, we're going to help reduce emissions. They were buying up every scrap of coal they could find on the planet, including here in the United States, and kind of revived the U.S. coal industry to a very large degree because of really high natural gas prices. It's easier for them to run their economy on coal-fired plants. So they bought up enough coal to get all the way through the winter of 2022 and into the summertime. So they're burning coal like crazy, even as we haven't stopped, but we've cut way back. We've reduced emissions, I think, by just about as much as anybody in the world at this point, including some of the European nations that are rather foolishly turning off their nuclear power plants. So the only way you get to net carbon zero, in my opinion, in the opinion of some of the experts that know this stuff, you're going to have a much more reliance on nuclear energy. It's safer. There's ways to do it. It's almost distributed energy these days. So I think we're going to see that more in the future once the politicians and activists wake up and figure out that really is a pretty cool, no emissions fuel, and it needs to be used as part of the overall strategy towards renewables. But anyway, huge fan of energy infrastructure here in the United States. Got a little bit off the beaten path there, and that's why when I noticed the other day that a firm by the name of Saba Capital had filed a 13D on a closed-end fund that invests in midstream assets, the infrastructure assets, pipes, storage, gathering, all that stuff, I got real interested. Saba Capital is run by a guy named Boaz Weinstein. Weinstein is probably one of the best fixed income traders on the planet right now. He was one of the ones that picked J.P. Morgan's whale pocket for $6 billion when the London whale blew up the financial markets and kept doubling down on really bad bets back in 2012. 2019, he spotted an egregious mispricing in credit default swaps, and he pounced on it and ended up making over 100% when the pandemic hit the U.S. markets and disrupted rather badly the high yield markets for a period of time. This guy is flat out a genius, and he's very active in two of my favorite things. One is SPAC arbitrage. We're going to talk about that more another day. It's one of my favorite things to do with money these days. But he's also very active as an activist investor in closed-end funds. He goes in, he finds the funds that have deep discounts from their net asset value. In this case, Salient Midstream Partners. And he owns 17%. It's a 14.5% discount from net asset values. These things have just not been popular with large investors over the last couple of years. They own all the pipelines that you can think of, all the great MLPs. They own Energy Transfer, MPLX, Plains All American, Kinder Morgan, Williams, MPLX, if I didn't already say that one. So they've got, just about, when you own this fund, you own just about all of the energy infrastructure in the continental United States, okay? And just gathering all these fees, they're paying it out. It's a 5% dividend. But now you've got Saba. They're over 17%. They've nominated 2 board members, and they're going to push. They're going to conduct a proxy fight. They want them to do a tender offer, liquidate the fund, open end the fund, do whatever they've got to do to make that discount go away. Not going to bet against them, guys. I've seen them win this game way too many times over the past couple of years. If we're wrong and they aren't able to force the discount closed, we've got a collection of assets that are increasing in value. They're pretty much irreplaceable, throwing off a 5% dividend. So, that's not something that I'm going to be upset to own longer term if it ends that way. I don't think it does. I think Salient's not a huge firm. I think that Weinstein and his team are going to force this discount open one way or another. So you collect the dividend. You're also going to get the big pop when the discount is eliminated through a tender offer or an opening and ending of the fund. The symbol is SMM. She said I followed him into this not long ago when he filed the original 13D. He's filed several more since then. It's up to 17% and is constantly buying the stock and forcing his way onto the board of directors. So that's in addition to just buying and holding community bank stocks. I love the what I call activist arbitrage strategy in closed-end funds. Have used it with a great deal of success for many years now. So anyway, got a busy weekend coming up. Of course, we've got the Ukraine. Going to be monitoring that very carefully. I'm sure my wife has some stuff on a list of paper somewhere that I'll do my best to ignore, but will be absolutely unable to, of course. And it's a critical weekend in the Major League Baseball negotiations between owners and managements. An agreement's not in place by Monday morning. They will take the unfortunate step of beginning to cancel regular season games. I will not be happy if that happens, but I'm afraid it probably will, given that they've been very stubborn so far. Somewhere in the middle there, we'll get some more time, do a little bit of research, kick some ideas around, and we'll be back to talk to you about them next week. So anyway, guys, I'm Tim Melvin. Thank you so much for watching, and I'll talk to you later, to some point early next week.